Last week was one of the biggest in the history of the crypto market and industry. It featured a shock Ethereum ETF approval and lots more. We cover all this right now in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. Quite a big week, hey Nick?
Yeah, it's been absolute mania in the crypto space. Again, we'll probably be focusing a lot on the US just because of the record number of activity happening and the real changing tide I've really noticed in the last week. Yeah, it's so much news that I actually can't quite believe it.
It is really hard to believe. Yeah, working in this space, we often say it's been a big week, but this time definitely would emphasize that. So yeah, happy to break it down. We will just give a quick market recap as always. It's green for the week. Most cryptocurrencies, notably Solana, actually is down 5% for the past 7 days. So we might get to that. But ETH is, rocketed up, being the best performer of the market, up 27% at the time recording over the past 7 days. BTC sort of was in the background, even though it had another green week, up towards 3 or 4% off record highs at one stage. Got to about $70,000 US. That's up 4% for the past week. And we've really, I guess worth pointing out is that we've seen ETF demand really come back in a strong way for Bitcoin, heading back to the levels we saw in the first half of March, which is, really, really encouraging. But the star of the show at the moment is definitely Ethereum. So let's break it down. What happened last week?
Yeah, so everyone was expecting, including us, that we were going to get a rejection for the spot Ethereum ETF. And it kind of come out a few days before, a real changing tide. And there was language saying that, hey, this actually might happen. And there was some communication between these ETF issuers, applicants, and the SEC. And so we saw 8 Ethereum ETFs were approved, I think, on the 23rd from the likes of Grayscale, Bitwise, ARK Invest, and I think 21 shares. So some of the major ones, and they all were granted approval, which was exciting to see. But notably, staking, that was the one thing we're all looking to see if it was going to be included in the ETF, and it was noticeably absent. So looking at this stage, that there will be no staking involved, but spot Ethereum will be approved. So that huge major change of attitude, because as of last week, even ETF analysts was only pointing to a 15% chance of approval. The market was at about a 10% chance, even dived like 7% at one point in last month. So huge shift of attitude, and this has resulted in about 100 billion or something. I think ETH added like 25%, in the space of a couple of days, which is a move I don't recall seeing so quickly before. So we've definitely seen a lot of people who are looking to get exposure to the ETH ETF narrative really take hold in the last week.
Yeah, it was a strong reminder of just how small the cryptocurrency market is in the grand scheme of things. I think the increase in ETH's market cap, if you just isolated that, it was enough for it to be, I think, 6th or 7th on the rankings of CoinGecko or CoinMarketCap, which was, quite astonishing. And that no staking component. So just to clarify here, you've got these issuers, they're saying, hey, we got approval to launch these products, these wrapped version of ETH. It'll be really appealing to people. They'll try to market it as a accessible, convenient way to get exposure to ETH, the cryptocurrency itself, rather than going to Coinbase or something and having to buy ETH that way. But yes, just to clarify, these issuers aren't allowed to be like, okay, with all this ETH that's backing our product, we're going to go and run our own validator and stake that, and therefore pass on these staking rewards to the end users or the end, I guess, investors of the ETFs themselves, which, I think would be the dream scenario from the perspective of the issuers. It'd be a lot easier to sell these products. But just worth clarifying there that we got sort of a watered down version in a sense of these products. But in terms of, okay, where do we go from here? Such big news. What was sort of, where do we go from here, Nick?
So I think everyone's curious that when they will go live. That's, I think, something that's on everyone's lips, and there's no certain date. It's something that we'll just have to wait out for in the next couple of weeks. So from what I'm hearing, it's about, probably more likely months than weeks, because they just have to get these extra go-aheads. I think they're called the S1 document. So just more paperwork and outlining the strategy of how these actually work. And because I think the anticipation was of a denial, this could increase the amount of time, I guess, to get all the ducks in a row and align themselves. Because unlike the Bitcoin one where it was pretty high chance that we're going to get it, the issuers were all really prepared. Whereas now they're probably on the back foot, even shocked themselves that it was granted in such, strong fashion. Now, I guess the impact, that's always going to be the next topic on everyone's lips after they go live. I know you talked about staking not being included, but, and this is probably one of the biggest bearish points about not being able to see the same level of demand that we saw at Bitcoin, just because they are not getting the full amount of yield, and you are, technically being diluted and not getting the proper amount of cryptocurrency you would get if you just went ahead and staked it yourself and were earning those rewards. Because if you compound a 3% APY over a long time frame, especially with that significant amount of money, that adds up to a real tangible amount of loss that, and maybe that's what we saw with the market rallying and adding billions and billions of market cap in the space of a couple of days, is that these people are already probably getting exposure to ETH now and maybe staking that way rather than waiting for these ETFs without the staking component.
Yeah, for sure. It will be a hard sell for these issuers. And yeah, I think it is consensus that the impact, the demand it'll be harder for people to be interested in gaining exposure. But yeah, I think we've got predictions there from one of the Bloomberg analysts, ETF analyst Eric Balchunas, predicting 10 to 15% of I guess the assets under management compared to how much we have currently in the Bitcoin spot ETFs. So I think the market cap of ETH relative to BTC, I'd have to check my charts there, but I think it's about 30% or so. But yeah, that seems to be very out there as a prediction. Would we get, assets under management being a third compared to Bitcoin spot ETFs? I highly doubt that would happen, at least from the get-go. So consensus is, look, it's a great positive step, but once it launches, which could be in weeks, maybe even a couple of months, in August, September, something like that, once that does go live, I don't think many people are expecting there to be just this fervor for getting like any exposure to this product.
Maybe the final one that's on everyone's lips is now we're hearing, okay, what about Solana ETF? What about all these other cryptocurrency ETFs? Even on CNBC, I was seeing that they were talking about Solana getting an ETF. That, really gets the mind going when you're hearing Solana being talked about on such a big, news publication. What are your thoughts there, Matt, on whether this means that other cryptocurrencies are then next in line to get a similar rally and, big moment in the sun with an ETF?
Yeah, well, I guess they're technically next in line in terms of process of elimination in a way, but yeah, I think that line is quite a long line in terms of the wait time. We spoke about the election, and we will be talking about the upcoming election soon. I think that has a lot to do with it. If the Democrats win and Gensler stays chairman of the SEC, I think that hostile or relatively hostile stance on crypto will stay. And I struggle to see an ETF for Solana or any other cryptocurrency actually coming out for a number of years. If we see Republicans win and Trump sort of teasing these pro-crypto, we may see a big change in the SEC and the administration's stance on crypto. And hey, maybe we could see an ETF for another cryptocurrency coming as early as next year. But that would be my most optimistic scenario. I got to point out that the ETH and BTC, they account for about 70% or so of the overall crypto market. They're both the only two cryptocurrencies that have a long-standing, I suppose, history on the CME, which is the Chicago Mercantile Exchange, the world's largest derivatives exchange, which is registered, headquartered in the US. And that has factored in a lot to these being approved, these ETFs, because you've got that history of the help with price discovery and whatnot. So look, if Solana is to get an ETF under the current regime, it would have to be listed on CME, get a decent amount of time to just have that history, which would at least be a year, just for the SEC to consider being a Solana spot ETF being approved. So that would be under the current regime, which is why I say the most bullish case or optimistic case for the timing of this stuff has to do with the election.
Yeah, it's a good point to mention there, especially with history. It's actually easy to forget, I think, that Ethereum was, created like 2016, like that's a long time then for ETH to be in the market and to, I guess, gain such legitimacy, even in the CFTC, like being called commodity by, previous administrations. And, that's just something that I think Solana and other cryptocurrencies just don't have, which is a big point not to overlook.
And just very quickly, I've seen people, put together, a bull case for Litecoin and Dogecoin having those ETFs just because you don't have that staking thing and their proof of work, consensus similar to Bitcoin. Sure, like they may have those similarities, but then you've got to think about, okay, even if they were to be approved, would the ETF issuers actually be willing to pay those legal fees and those setup costs and infrastructure costs, which are in the millions, just to run these ETFs, when their market research may suggest, which I think it would suggest, there isn't that much demand to get these ETF spot instruments. So you've got to remember, it's not just factoring in the regulatory side in terms of SEC stance and regulators. You've also then got to factor in the incentives of the issuers, whether it's a profitable instrument to go out and release.
Perfect. Yeah, well, we think we'll have more to report in next week. And
I think so. Yeah.
The reoccurring ETF update podcast. Which,
yes.
It's a good problem to have.
Yeah, absolutely. Let's get into the SAB 121, which we talked about last week. There were some updates in terms of it going through the Senate.
Yeah, so this passed the Senate with quite a strong showing. There was more Democrats that voted for this than were originally anticipated, which signaled a really strong bipartisan,
support
for, this active crypto change in the rules, which allow big banks, institutions to more easily access and custody crypto assets, which currently they just can't get involved in. So this all comes down to the White House now, who said that they were going to veto this and strike it down. So I think they have until the 28th of May. So maybe after this pod goes live, we'll know whether or not this rule was vetoed or not. This has a big deal in terms of big banks just getting involved in cryptocurrency. So if we see the White House, flip and say that they're not going to veto it, to me, that's another strong signal that, hey, this changing political landscape for crypto in the US is here to stay and really just marks another shift in the kind of really toxic environment that we had in the last couple of years.
Yeah, well said. So we'll watch that space in terms of the week ahead. And another bill that really got some traction last week was the FIT 21 bill. Forgot what it stands for, but it's basically about the market structure of crypto and trying to build in some clear regulation and legislation about how the cryptocurrency markets should be regulated. And this also won in a landslide victory with, again, Democrats really chiming in here and supporting the bill, 71 in total. So we saw overall vote of 278 to 136. So it passed through the House. As we covered recently, you've got to go through the House and then the Senate. They both have to approve it, and then you pass it on to the White House or the President Biden's desk, which, as you said, with the previous one, the SAB 121, their office is indicating, hey, we're not going to approve this anyway. Normally, it's more of a just tick the box, and they haven't been as strong. Notably, with this FIT 21, they did not come out and say that they were going to veto it, which was promisingly, relatively speaking. It's still hard to gauge whether they support it or not. But anything else to say with this FIT 21 bill?
Just that it's probably the biggest one that we were all waiting for, because it provides market structure for the industry in the US. So huge deal. And I think that's why we're all so excited about it. And we've been probably waiting for this for a while. And it's kind of at that moment where it's finally happens. And now we're kind of waiting to see exactly what will be included, because once it hits to the Senate, we're sure that it's going to change and we're going to get a final version. And that will have a lot to say on exactly how hard, I guess, they're going to come down on the industry, and where they draw the line at commodity security, what licenses you need, who can get involved. These questions are going to be answered. And hopefully, it just encourages more innovation and encourages people to, to build inside the US and stop fleeing to other countries for fear of, not being able to create a token or, a cryptocurrency backed project in the US, which unfortunately has been the case.
Yeah, definitely. And for anyone out there who's just, they're just invested in crypto or altcoins, and they don't really understand where this all fits in. I think we've mentioned this many times, but for any new listeners, this stuff absolutely matters. It's arguably the most important factor or unknown currently with the cryptocurrency market. In my opinion, I think the market size can multiply if the US is supporting the crypto industry, or at least not as hostile as it currently is. Just to put it in context for anyone who is getting a bit lost about how this is so relevant. But keeping on with the US, and it was a huge week as we said. So let's continue on. We've got the Trump, the presidential candidate, trying to get back into office, and we spoke about how he's seemingly becoming pro crypto. I think a couple of weeks ago, but now we've got even more words from him at a recent speech.
Yeah, he come out and not only accepted crypto donations and talking about building like a crypto army and harnessing that part of the vote, but also that I think it was a quote that he said, "Our country must be the leader, in the crypto field." Kind of paraphrasing there, but it's another pro crypto speech, in one of his rallies, and just another big sign that he's sort of doubling down on that pro crypto sentiment and really garnering, a bit of support. And you have to, ask yourself, that's a core reason why there's been such a dramatic shift in, crypto bills that have been passing in the US in the recent weeks.
Definitely. That last point is worth considering for sure. So as we said the other week, time will tell whether this is all posturing, trying to get votes, and then he pretends not to know what even cryptocurrency means in 6 months if he becomes president. But time will tell. For now, definitely encouraging signs for sure, getting crypto more in the conversation and public awareness. In terms of altcoins, always some big updates. Yes, there was massive news headlines, but there was still some really significant altcoin developments in the past 7 days. So we'll break them down, starting with Farcaster.
Yeah, Farcaster is one of these new social media platforms that are created on blockchain and crypto rails. They raised $150 million from Paradigm and A16Z crypto. So SocialFi is just this big new wave that has been really gripping the crypto space. And I think it's a broader comment on kind of big tech and, Twitter and all these other platforms, and, who controls like data, who controls information and just your social graph and your social circle. So we've seen crypto is potentially looking at an answer, to provide people with more power over what they create and over their audiences. So this is one of the narratives that we've been noting to watch out for in the next couple of years. And no doubt we're going to be seeing a huge amount of development hit Farcaster, which has already been really seeing some strong adoption numbers and probably one of the most successful kind of crypto apps out there at the moment.
Yeah, definitely. You look at that window, you often see things pop up for a couple of weeks, then fade off into, you never really hear of them again. But Farcaster definitely bucking that trend. And that big raise should be seeing, much greater things in time to come. Chainlink, they completed a pilot. This came out last week in collaboration with DTCC. So I think a very large sort of clearing agency in the US. And it was in collaboration with a bunch of different major financial institutions and banks. I think JP Morgan and BNY Mellon were two of notable ones as part of this pilot. All of this is to do with accelerating, I suppose, the tokenization of funds, really, to put it as simply as possible. It's great to see more progress being used, and these large financial institutions using Chainlink's CCIP, which is their interoperability protocol they've been working on for at least 4 years now. It's soft launched about 12 months ago, and they're getting ready to fully launch it. So a lot of these major banks, even ANZ here in Australia, has been using CCIP and testing it out. So keen to see that progress for Chainlink.
Maybe keeping on the DeFi, ecosystem, we got Uniswap Labs. They finally responded to their Wells notice from the SEC last week. They sort of explained, to the SEC why they should not take action against them and made their case. So kind of ramps up and makes you really pay attention, because they just said, hey, we don't custody crypto assets ourselves. We're kind of this, middle infrastructure that helps facilitate people just to connect together, that we shouldn't be bound by, the same rules as what, you may be claiming against. So huge deal, because we're possibly going to be seeing maybe a formal, accusation or, court case or lawsuit come against Uniswap Labs if the SEC does decide to go forward with the lawsuit. So a lot to watch, and Uniswap's got a lot of, I think it comes at a time where they're having robust development. V4's coming out, hooks. And now a hooking accusation by the SEC. So a lot to watch
definitely. For better or worse, I'll be in the headlines forever. It seems like in the last 6 months of this year. It's a big second half of the year for Uniswap. In terms of Arbitrum DAO, interesting one here to wrap it up. They are looking to vote, or they're voting at the moment on what would be an 8-week pilot process where they would have a team will go in depth into researching whether to set up an M&A unit. So basically, a team to decide whether to merge or to acquire, more importantly, to acquire different projects in the crypto space, which would be, quite novel in terms of having a dedicated team to doing that. So watch this space, and will these big DAOs become even bigger by acquiring new startups and whatnot. So worth monitoring for sure. In terms of what's happening for the rest of May, or what we're looking forward to, what have you got, Nick, for this week?
We've just got more of the same, to be honest. Looking at SAB 121 over the pod, we'll find out whether it was vetoed or not. That's going to be a huge point for the industry. And then hearing more information about the ETH ETFs and more of a timeline on when they potentially will start to go live and start to be traded.
Yeah, by far the biggest thing to watch at the moment. In terms of things, that were underappreciated or overappreciated, with all them, as we said, it was a historic week really in crypto, one that will be remembered for a very long time. You saw a lot of things go underappreciated just because they didn't have the airspace or public awareness with all the attention elsewhere. One of them was definitely Uniswap. We just spoke about them in terms of their SEC battle, but they actually then also came out, and the Uniswap Foundation team member who proposed that very memorable proposal to the governance forum a few months ago that really spiked the price of Uni and indicated that, hey, we're going to have a vote on whether to start letting Uniswap fees be captured by the protocol and potentially shared to maybe stakers of Uniswap in the future. That all sort of got put on ice for a while. We didn't hear much of it. They were getting audited, they said. But now that team member who proposed that initial proposal has come out over the past few days and has said, hey, this is going to go live for a vote on May the 31st. And then importantly, this won't be the actual vote to decide whether to activate fees. However, it's a prerequisite. To really put it simply. You can ask more in the comments if you need more, but we might link to that actual proposal. Definitely was underappreciated, drowned out by other news.
Yeah, that was one that I even didn't quite get across. So excited to see. Hopefully this is the one fee switch proposal that passes. We've seen a couple in the past, and hopefully this time is different.
Yeah, for sure.
I think my underappreciated will go towards maybe a Federal Reserve survey that was also went a bit under the radar. They found that 7% of users in the US had used or held cryptocurrency. So this was actually down from 2021 and then 2022, where it was about, I think, 11 and 9% respectively, and now is about that 7%. Most notably, I think less than 1% actually used cryptocurrency for utility purposes to send and receive payments, which was one of the things that stood out to me. And that's going to be one core metric that I sort of expecting to really explode, because when we think about, hey, less than 1% of all people that held crypto actually used it for utility purposes, that feels incredibly low and really signifies this speculative, appetite that is currently in the market. And we can really define where we are at the moment, where I think hopefully over the next couple of years, we start to see that number rise from less than 1% to, closer, hopefully to double digits. The more people are using these in a real utility driven way.
Particularly in these developed countries, the very just speculative crypto is seen as, but those use cases in other areas of the world starting, I would hope it's a bit more than 1% of using cryptocurrency, which is great. But yeah, these surveys are always interesting. I think, we always talk about the Coinbase one, but I think it got found out not found out, but I think a lot of people read the fine print on that Coinbase survey where they say something like 52 million people own crypto or something in the US, but that's based on a sample of a survey that's extrapolated to the whole country. So you always got to be careful with these surveys. And this one from the Federal Reserve definitely, I guess, swings back the other way. So it's a great, I guess, reminder in a way of just how small and tiny crypto is and just the opportunity that is ahead. But yeah, we will keep monitoring that. Thanks for that one, Nick. But that is a wrap for this week. If you are looking for more insights, definitely head over to our weekly Shift newsletter and go ahead and subscribe. It's a free weekly market insights that's delivered to your inbox every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.